Advocates are pushing for a one-time billionaires tax to fund the crumbling Medi-Cal system here in California. We're going to get into that story and break it all down for you. But first, if you're not part of the 10% of amazing Californians who want to learn more about California politics, what's going on, the how, the who, the what, the why, all that stuff, figure out how we're going to try and fix this state, make sure you hit that subscribe button as well as like notification. All that stuff helps with the algorithm. Let's break into this first story. So this is an article from Cal Matters. It said, should billionaires pay more? Californians want voters to decide. A proposition has been proposed by the Service Employees International Union, United Healthcare Workers West, and St. John's Community Health in Los Angeles want voters statewide to approve a billionaires tax to help prop up the state's healthcare and education systems. The proposed ballot initiative would levy a one-time 5% tax on approximately 200 billionaires in the state, generating roughly $100 billion in revenue, according to proponents. Quote, we are facing literally a collapse of our healthcare system here in California and elsewhere. We're going to get into that, probably why it's crumbling. Actually, it's the real reason why it's crumbling in a little bit. This will help keep healthcare facilities open. It will stabilize premiums and coverage for all Californians, protect healthcare jobs, and also improve public education. The proposed initiative would tax the 2025 net worth of billionaires residing in California, allowing them to pay off the obligation over 5 years. So they're planning on taxing you so much that you could pay it off over 5 years. The revenue would go into a special fund with 90% reserved for healthcare spending and 10% reserved for K through 12 education spending. It needs 874,641 signatures to be placed before voters on the 2026 ballot, a number that the groups are confident they can reach. Getting voters to ultimately approve the tax, however, could be a hard sell. Susan Shelley, a vice president of communications with the Howard Jarvis Taxpayers Association, said most Californians will probably assume that the tax will not affect them, but establishing a wealth tax in the state could create a troubling precedent. Quote, we tax income at a very high level, but we don't tax wealth and assets, Shelley said. Nearly half of the state's personal income tax revenue goes from just 1% of the state's earners. Over time, she added, a wealth tax could come all the way down to the middle class, and they say you have too much equity in your house, and we're taking. So we're going to talk about that in a little bit, why this is a horrible idea, why wealth tax in general, a one-time wealth tax, is a horrible idea. But I did want to look at the actual language of this. Here is some of the language from the proposition that they are proposing that is going to try to be on the ballot for next year. So we're going to keep an eye out for that in 2026. Goes on to talk about the 200 billionaires. They have about 1.5% of their total wealth. They have $200 trillion in wealth, 1.5% of their total wealth in annual state taxes, according to economic estimates, a small fraction of what other Californians pay. The great wealth that billionaires control allows them to avoid taxes ordinary Californians can't. Billionaires often own stocks, businesses, or properties that increase in value over their lives. Normally, when someone sells these assets, they pay taxes on the profits. But many billionaires have no need to sell because their assets are so vast. Meanwhile, other tax rules mean that those who inherit millions or billions owe nothing in income taxes on those gains. In addition, many billionaires engage in transactions that shift the location of their wealth on paper, but not in reality, further enabling them to escape tax on profits earned while they in fact reside in California. So what they're talking about here, and this has been floated by progressives on the far left, is that they want to start implementing what they call these unrealized capital gains. So if you have not realized these capital gains, meaning that they know that you have these gains and all this, then they are going to try and tax you on the assets and tax you on the value of that. Not when you actually sell the asset, but when what they value your property on. So that's what they're trying to tax here, is because there's all this wealth that they see in assets, and we're going to break down why that seems to be a failed idea right out the gate, and why it's a horrible idea. A one-time 5% tax on California billionaires in this emergency situation where the state budget is facing significant cuts to healthcare and education is also fair because billionaires have used state resources. They've used state resources, not like they've invested their own money, took the risk, built a business, worked tirelessly, long hours to build up their company, put all their funds into it, and tried to build these big companies. Most of these billionaires are usually people who take enormous risks. Maybe they're people like an Elon Musk, who's no longer here, but who take on these enormous risks, usually for the betterment of society, because what they're doing or what they're providing is something that helps push society forward. It's a product that helps people, because that's how a free market should work. It should be that people are creating, they find a need, they address that need, and they make a product that meets that need that consumers want. That's how a free market should work to create their enormous wealth. And we're the largest beneficiaries of the federal legislation that contributed to the current California budget crisis. Now, this is where it gets really terrifying. Notwithstanding other provisions of the Constitution, the Act provides for taxation on all forms of personal property and wealth, whether tangible or intangible, and allows for the classification of personal property and wealth for differential taxation or for exemption for the purpose of imposing the one-time tax on the wealth of California billionaires. Personal property and wealth that is so taxed includes but is not limited to shares of capital stock, bonds, or other evidences of indebtedness, and any legal or equitable interest therein. This goes on for another 20 pages, listing out everything that you are going to be taxed on, even such things as whether you have an interest in a trust. Do you have money in a trust, and is there a value there? They're literally going to go through every single asset that you have as a billionaire and go, okay, let's add it all up, whether you have money on it or not, or whether it's a liquid asset. Liquid meaning, can you use it for cash, or do you have it as something that you can put into your bank account? Whether it's liquid or not, they're going to tax it. And that's not really the point of, so they look at these people who are billionaires. Maybe they don't have $1 billion in the bank, but they have a net worth of over $1 billion. And they want to start taxing things on houses, corporations, stock options, trusts, all of this stuff. They want to start taxing whether you've realized the gains on or not, and whether you've sold it or not, and whether it's liquid, which of course is going to create enormous problems if you're a billionaire, because the point of owning these things, owning real estate, putting stuff into trust, putting stuff into stock options, putting your stuff into different financial markets, the point of it is to maximize your investment and to get a better return on investment while also reducing your tax liability. Some people are going to say it's tax evasion. I say it's just being smart and knowing how to manage your money so you don't have to keep giving more money over to a blood-sucking parasite like the California state government. But that's what they're basically saying. They say that we're coming after everything. It doesn't matter if you're liquid or not. We're coming after everything that you billionaires own, and we want a 5% one time. Remember, nothing with the government is ever temporary. It's a one-time thing. We swear it's a one-time thing. But let's talk about Medi-Cal for a second, and why is it crumbling? Why is there this need by SEIU, which is one of the most powerful and influential unions in California? Why is SEIU pushing for this? Well, Medi-Cal is broke. After bankrolling Medi-Cal, Governor Newsom wants California elderly and disabled to pay. Newsom recently confessed that California's Medi-Cal is insolvent, which is our version of Medicaid, a public health insurance program which provides needed health care services to low-income individuals. They're now proposing that seniors and disabled, hey, start paying up. We know this was created for you. We know that's the point of this, but guess what? We need you to pay up. We need you to fork over more money. Newsom agreed to raise the limit to $130,000 per person in 2022. Then in 2024, the limit was erased completely. Now Newsom wants to bring back the original limit of $2,000 amount that was set in 1989. This would reinstate complex rules about wealth and property. Again, we're getting back to this idea of wealth and property that kept thousands of seniors and disabled people from qualifying for Medi-Cal. Under those rules, an individual's first home and car are exempt, but other properties count towards the $2,000 limit. The balance of 401k or retirement account are exempt, although payouts are considered income. Life insurance, cash on hand savings accounts also count towards the limit, even certain types of funeral plots. They're going to count your funeral plot as part of your net worth if you're a senior or disabled, and whether or not you have to pay into Medi-Cal, because Medi-Cal is broke. I don't know if you've known this, but Medi-Cal is absolutely broke. And why do you think it's absolutely broke? I'm going to give you a second to guess. You can put it in the comments below. Why do you think Medi-Cal is broke? Oh, it's probably because of this. This happened just recently. Medi-Cal went broke because they found out that the cost of insuring all undocumented citizens here in California went billions over estimates. Goes on to say, Gavin Newsom touted California's role as the first state in the nation to offer health care to all income eligible immigrants 1 year ago. Started with Jerry Brown, started with kids, then started with elderly, then it started with disabled. Then Gavin Newsom took it all the way to the limit and said, okay, everybody, doesn't matter whether you're a citizen or not, you get Medi-Cal. The $9.5 billion price tag of California state-sponsored health care for undocumented immigrants is already more than $3 billion above the budget estimate from last summer and is expected to grow. Now, what happened was, this was several months ago, that they announced that Medi-Cal was effectively broke and that they had to take money and loan money to themselves. They had to get a loan from themselves to fill that gap just for 1 month. They had to ask for billions of dollars. First, it started off as 2, then it was 3, then it was 4, and then it just became $6 billion just for 1 month. So there's so many people who signed up, so many people who are undocumented signed up for Medi-Cal, because why not? If the state's going to provide you health insurance, why not just sign up for it? That it literally broke the system. So for as much as Newsom and Democrats here in California want to virtue signal and be the almighty and all righteous and altruistic politicians, wonderful people that they are, they didn't see the writing on the wall that there's not enough people who are paying into the system to take all of that money out. So now their solution is that because it's absolutely broke and they don't seem to want to back off of this at all, and they want to seem like they don't want to back off of this, California Democrats are not backing down from this policy of allowing undocumented citizens or illegal immigrants from signing up for Medi-Cal. They're now proposing this proposition. SEIU is, they're putting this proposition on the ballot, trying to put it on the ballot for next year. That would be a one-time 5% tax of all the billionaires. Now, this is what always makes me laugh about these ideas of we'll just tax the billionaires. We'll just tax the rich. It's what Bernie Sanders says. It's what Zohran Mamdani says, the new mayor of New York City. We're just going to tax the rich. Let's just tax. That's where the money is. We'll just take all the money from them and we'll put it into our social services and our public programs. And that's how we're going to fund it. Little trick that billionaires know that for some reason Bernie Sanders and Zohran Mamdani don't seem to understand, or Gavin Newsom or any of these people don't seem to understand, is that we are a country made up of 50 states. And guess what? You can move. And that's just what happened. An article last year, 2024, it said, we're leaving. Rich Americans are ditching California and taking their tax dollars with them, and the tax rates they're fleeing have now gotten even higher. Analysis of the approximately 750 people who have bid farewell to California over the last 3 years has revealed that thousands more high-earning, well-educated workers have left the Golden State than have moved in. This is a problem, as Joel Kutkin, a fellow at the Chapman University, told the Los Angeles Times, because, quote, people are leaving, are taking their tax dollars with them. It is a well-known fact that California is the highest state income tax in the country. For a decade, the top income tax rate sat at 13.3, but as of January 1st, the top rate was increased to an astronomical 14.4 for those earning $1 million or more. And that's just $1 million or more. We're not talking billionaires. We're talking people who are millionaires, people who have assets or make money about $1 million. So all of this to say, California is doubling down, and they want to propose this proposition. Union, SEIU, a very powerful, influential union full of healthcare workers, is proposing this proposition for a one-time billionaires tax to try and grab as much money and as much assets as you can. Now, the problem, going back to the idea of taxing someone's net worth versus what liquid assets they have, like what money they have in the bank, their liquidity, is that now what happens is billionaires are going to be forced to sell off assets. They're going to have to figure out how to move. They have very, very high paid, very smart accountants and tax advisors who know how to get around this stuff. They are going to figure out how to move this around. And people on the left, any progressives, are going to say this is tax evasion. I say this is just smart money management. The less you have to pay to a blood-sucking parasite like the California state government, the better, because you don't want to feed the monster. This is a problem. You can't just go in and grab money from an office building you own. You can't just go in and grab money from stock options that you own. This is why people own a various amount of different wealth assets. They have a portfolio. And while you may be worth over $1 billion, that does not mean you have $1 billion in the bank. So let me know what you think in the comments. Is this just more insane posturing from the far left here in California? Do you think this will prevail in California? This is going to be put to a vote. If it does get the signature, will it prevail here in California? Will people actually vote it down, or will people vote for it? And will California Democrats realize that maybe letting every single undocumented citizen or illegal immigrant onto Medi-Cal was not a great financial idea, and maybe they should have pulled back a little bit? Do you think they'll ever change their mind on that, or they're just going to keep pushing forward? Let me know in the comments what you think, and I'll see you on the next one. Later.